Welcome to Cutting Edge with Charles De La Torre and myself, Ashley Buckle from Materials Exchange. We did it last week. We did it while I was in Bend, Oregon last week, Charles, and you and I have talked a little bit today about this crazy market. So the kiss of death came out this weekend, man, in the lumber industry. The Wall Street Journal had an article about lumber prices going up again, which generally is they usually catch up with that right about when the rest of the general public finds out and just about when it's ready to turn again. Although we'll see 2 days of limit down. I think if you took a consensus right now, and I was going to ask Greg Riley if he put a poll out or not yet, our consensus is 99.9% of the people out there are bullish right now and think we are going up to the last all-time high. I know mills are feeling that way. Customers are feeling that way, but I'm not sure. I'm not sure if that's what's going to happen, but we'll see, man. Again, you got any thoughts on that?
I don't know. I mean, I think it's easy to jump on the bandwagon based on what happened last year. But if you look at the charts and you look at pricing trends, kind of did the same thing. Obviously, the velocity of and the speed at which it went from a week before Thanksgiving till the week of Christmas, prices appreciated, 300 times faster than it did last year. But I think what goes up must come down. And I think that also has a lot to do with transportation bottlenecks that are still going on and people are still waiting on wood.
No doubt. And look at the world that you live in, all the different things. There's a couple things I want to talk about. One was I saw another Canadian mill got taken out last week by a larger one. That's happening over and over again. What do you think about that? What do you think the effect is going to be on that to your market in the Southeast?
I don't know if there's going to be a big it's hard to really decipher at this point, depending on how they plan on moving forward. Are they having any expansion plans? Are they making any capital expenditures? Are they increasing production? The mills that they're buying now are miniature compared to the billion board foot mills they had out west in BC. So it'll be real interesting to see what their plans are for it. But I also think they are bullish overall for Southern Yellow Pine, which is in the Southeast, right? And
yeah, for sure.
Canadians own a wide swath of those producers and production. So I don't know that they're going to try to ratchet it up too much. Maybe they just do it because they need the production. They still want to have a stronghold in Canada and have the ability to produce homegrown SPF. But I don't know. Only time will tell on that one. It's just it's interesting how the West is now coming for the East. I mean, Ecom got bought up by West Fraser a couple weeks ago too?
Interfor, I think.
Was it Interfor or West Fraser?
I think. I'm not sure. I thought it was. It's quick. A Google button can figure that one out. But I thought it was Interfor.
Might have been. Let's see.
One thing I think while you're looking that up, how it'll affect. I was out on some of the trading floors last week in the Northwest.
Interfor.
Yeah. I was out on some of the trading floors in the Northwest, and that particular mill that got bought out was a big wholesale-friendly mill, right? Mm-hmm. So one thing that you're going to see is probably more contracts get absolved in that, and less open market wood maybe available in the current, brokerage side of things. That's one thing that that you could see, which is I'm not sure how that is in the transparency thing. The other thing, we were talking to a bunch of the Southern Pine mills last week, this week. It seems like the resounding thing I keep hearing is we just need to cover our contracts. We've got no open market wood right now. We're covering our contracts. Help me out on that. So if they're only 50% contracted and they're covering all their wood on the contracts, where's the other wood at right now? Did that all just get specced out and shipped to treaters and everything and gobbled up and put on the ground, sitting in inventory right now?
I think you hit the nail on the head as far as spec goes.
Yeah,
a lot of guys kind of jumped on the bandwagon because it started disappearing fast. I mean, I remember buying, 25, 30 trucks of one item, and then you make a phone call the next day, and it's like, oh, yeah, we're in the whole 42 units. And then the next day it's 15 trucks. And then, oh, we're pushing out to the week of 12/3. And, that's a 3-week lead time from that time in November. So it makes it difficult. And I think I touched on that last week, but it also makes you wonder what you touched on when you opened, 99.9% of the population is bullish. Well, how sure are we?
Yeah, well,
Things,
yeah, and look at when I buy certain things, or when I go out and buy a stock, I think that stock's going up, right? And people can tell me reasons why it may go down, but I don't want to listen to them, right? Because I own that stock and I'm long. Just like people when they go out and they buy and they put 120 days inventory on the ground, they kind of have an axe to grind that it's going to go higher, right?
but is it really on the ground though? That's the question.
No, I don't know. I mean, so let's go back. A lot of people have bought stuff and it's shipping, or it's gonna, or I think that some of these sellers went out and were willing to lay into these high prices. And heck, you still probably have one that you bought a month and a half ago that hasn't shipped yet, right?
Yep.
And is that normal?
No.
So what changed?
Pricing.
Yeah.
And
Yeah.
end of the year, you got quarter end, you've got publicly traded companies that now own small production facilities and increase their footprint, and they have shareholders to answer to.
Gotcha. So what's your feeling going into the end of the year here? So one thing I've always seen is long holidays can give people's head a shake and maybe change the way they're thinking about things. But boy, oh boy, as I look at this market, I was gone visiting mills and trading floors for a week, and I couldn't find every conversation I had with everybody in the Pacific Northwest were we're going to stay up through March, maybe to May.
I don't know. I don't know if I agree with that.
I'm not saying I agree or disagree. I look at both sides, right? But boy, oh boy, it's hard to find anybody that thinks this market's going down over the next 3 months. I couldn't find anybody that thought that.
Well, I mean,
and maybe, and you know what, they could be right on that, because these once everybody gets all lathered up in this industry, there's not a lot of people it takes herd mentality to turn it around, and the way it turns around is people stop buying
quickly.
and I guess you and I have seen in our long and short and mid-sized careers is it always is surprising and happens when you least expect it, but it happens, right? All of a sudden stuff stops, right? It's like,
well, and that's why I'm happy to hear that 99.9% of everybody is bullish, because I don't know if I agree with that 100%. So maybe I'll be like Michael Burry, the guy that made $10.5 billion shorting credit default swaps in 2008.
On the real estate.
Yeah.
Yeah, I watched that movie. I watched that movie. That's a confusing one to watch with people that start asking you questions during it.
Yeah, it is. It really is. I don't know. I mean, there's a lot of good things going on. I mean, the market definitely has some momentum behind it. And
for sure.
It just feels different than what happened last year, to me personally. It feels a lot different. You've got, this time last year, we were still in the middle of COVID and all the other things, and interest rates were still cheap and nobody was going to move it because of lingering issues as it concerned to recovery and so on and so forth. We're now 12 months after that. So what's going to cause it to pause? I don't know. The Bank of England just raised their interest rates to curb inflation. So how's that going to affect, some of the European wood that's going in there? Are those prices going to drop and inflationary numbers come down and it kind of correct itself and they have more production to send here? Or is it, magically after the holidays, oh, well, I have a couple of these, I have a couple of those, and then all of a sudden everybody starts to see a little bit of a crack and herd mentality takes over?
Yeah, I mean, we have 100 trucks listed on the platform today of people that weren't listed last week, and all of a sudden they're listing some prompt stuff, right? Now, albeit a lot higher numbers than we're used to, but there's products starting to show up. It's not a huge one, but we've got hedged products starting to show up. Board comes off, people start, selling their hedged product into here. One interesting thing I did have, but you and I talked to a lot of multifamily people. We deal with a lot of them. I had one call a week ago while I was out west. Another one wanting help on buying. Wanted help on buying for first and second quarter. I'm like, what kind of help do you need? Well, they've got a contractor, framer, GC. I think I told you about this. It goes through this whole thing. They usually don't care until these guys call them back or girls call them back and say, "Hey, that thing we had locked in with you, it's up $1 million now, right?" And all of a sudden they start looking. So you still, and one of the questions they asked was, "Can we put wood on the ground?" Never put wood on the ground before, right? But want to put wood on the ground. So I think one, there still is a lot of wood in the ground that's been sitting around for these jobs that have been covered right outside the traditional one. And I think people are looking again because it takes a while to get through the chain of conversation communications for the people on the end of these jobs that are actually the money for them to realize that commodity lumber prices are back up again, right? And
oh yeah, I mean, I think you hit nail on the head last week. You said something. Somebody that's not involved in the industry said something to you specifically. Oh, well, lumber prices are finally coming off, and I've had people walk up to me and say that and kind of chuckle,
yeah,
because that's, I mean, you're a day late and a dollar short. But once again, you bring up Wall Street Journal, and every time our industry gets into mainstream media, it kind of calms the waters a little bit. Now, how long does that take, and at what point does it correct itself to a percentage that the market can withstand? But it's almost like people prefer paying $1,000 versus $600,
yeah,
because you had plenty. I mean, you had 45, 60 days, almost 90 days really, to where you had an opportunity to kind of pre-buy some of that stuff and pay a little bit for handling and reloads and what have you. But it's nowhere near what they're paying now.
absolutely, absolutely. Here's a question, and maybe this Jean-Francois Gilbert. Does that sound? I hope I got that correct. You may be able to pronounce that better than I can, Charles. He said concentration in the industry in U.S. and Canada because of profit and cheap money. Is that changing the game? Well, I mean, yeah, it's been changing the game for a long time, right? And I had a good conversation with a buddy in Seattle that actually helps on mergers and acquisitions on the um, customer side, not the production side, on the builder, on the retail
Capital
lumber
side.
capital side. He had a good point. He goes, when we started doing this, my partner and I, 15 years ago, when we started talking about multiples and buying, he goes, it was a different conversation. Now, when we're talking about multiples, it's hard for us to justify that you're getting a good deal buying at these multiples, right? But people are still have an appetite for buying these, and people on the sell side have an appetite, or the production side have an appetite for buying more mills, because I think the name of the game in every industry right now is acquisition and growth, right? And at any cost, many times. So, is that changing the game? Yeah, fewer people, bigger people, on both sides of the equation. How does Ashley think it's changing the game? I think there's less people out there willing to speculatively buy and sell lumber now because they work. If you ask me how people act, I'll tell you how they act based on how they're incented. If you're the owner of a company, like you are, Charles, first generation owner of a company, you have all the risk walking out the door with you every day, whether you buy something or sell something short. It's your bank account. When somebody buys a company like yours and all of a sudden you're not the owner anymore, you may still think differently, but it's somebody else's money. So multiply that 10, 100x as these companies grow, absorb all these people, these third generation companies that are now working for big companies. It's not their money anymore, and they all think of risk differently. They all try to do more contracts. So I think it will affect things quite a bit. You can look to the pulp and paper industry over the last 50 years, when there used to be hundreds of producers and they combined into basically 5 or 6. And all of a sudden they look at a print and everybody talks about how their contracts are relative to print at a big premium or discount. There's not a lot of speculative play in the market anymore. So as things, I feel like I just riffed on something there. What do you think of that, Charles? Does that make any sense?
I mean, it's a matter of perspective. We have sales guys, and they're allowed to take calculated risks. Not allowed, but they have the ability to. Let me
because you let them as the owner.
Well, yeah. Well, I mean, at the end of the day, they eat what they kill, and if
Yeah,
they're willing to put their paycheck on the line, they should be rewarded for it.
right.
But to go back to his question, the concentration in the industry. I mean, you look at any major industry as far as commodities go. Okay, let's look at grain. Who are the big players in grain? You got ADM here. You've got meat packing, ADM. You've got a bunch of conglomerates that came in and bought all these small guys. But what
Meat
it
packing,
does is,
there's five in the meat packing industry.
and if you look at what's happened now, all of a sudden, the cattle farmer's greedy, but that's not really the case when you look at cattle prices on a futures chart. But what I'm touching on is that yes, there's a lot of concentration in the market, but it also presents an opportunity for independent operators to take a calculated risk based on cheap money. It's all about perspective. And if you understand what your perspective is and what the rules are to play the game, it almost puts people such as myself and my organization in a position of power. Because
Absolutely.
we have more flexibility, we don't have the hierarchy, and we can go and make knee-jerk reactions and decisions and see them through. Where a lot of these things, Teal Jones made an announcement to build a mill in Louisiana. Well,
Yeah.
the last time somebody made an announcement in Louisiana, or I think it was rural Louisiana or southern Mississippi, they repealed it because the lumber market crashed in the middle of the summer. So it almost makes you wonder how true are these investments, number one. Number two, how are people such as ourselves and independent operators and people that are theoretically we are end users. I mean, we're involved in the wholesale trade side and distribution, but we're also end users, and we have the ability to remanufacture and manufacture products in general. So what do we do to position ourselves to take advantage of the inefficiencies in the market, and how do we make decisions based off of that, knowing that these big organizations are going to dictate the rules of the game? Well, it's
Charles,
just like anything else.
that's a great point. I didn't think of as much. I look at all the overvalued, undervalued charts and all that. Think about that as people are willing to take or don't want to take as much risk because they don't get paid for it. And guys like you are willing to do it. Those inefficiencies are going to really be multiplied. And you're going to have some really good opportunities. Now, one thing you may have to wear risk a little longer or take a little bit more, but my gosh, there's some great opportunity there for people that are still like you.
Well, I don't know that you have to wear it longer. I think you bite off what you can chew,
True.
and that's the difference. So when you understand the rules of engagement and how they're going to market, how do you defeat that, or how do you use it to your advantage and move forward to position yourself and your organization to be successful? And really, that's what we're looking at. Because I mean, the concentration has changed the game, but I also think the volatility in the lumber market has changed the game too. Because if volatility is here to stay, and you see $300, $400, $500 swings in a 12-month period, nonetheless 60 days, who's really going to be willing to play in that game? It's gonna take a special person, a special organization to really understand how to flex and move. And a lot of these big guys, they have to keep a lot of inventory on the ground, and in order to keep prices up or average down, or however you want to look at it, they've got to make big moves. Whereas independent operators and smaller people with smaller footprints can be a little bit more amicable with the market. So once again, I think that the answer to that question is the concentration in the industry is driven by cheap money, yes, but I also think it's also driven by the lack of available raw material in Western Canada. Obviously, I think we've all kind of seen that coming.
For
But
sure.
I also think they're cross collateralized. I mean, they do what a lot of wholesale trade guys do daily. They trade species against species because they have Southern Yellow Pine mills and they have spruce mills, and then some of them own Euro mills. So theoretically, they win no matter what.
Well, they almost have a natural hedge on, right?
That's exactly what it is.
You have a natural hedge. You have a species or a location. You have a lot of location basis on, or a lot of locational hedge on, right? And then if you add to some of these where they actually have some production, if they're making eye joists or doing that kind of stuff, then you're even putting more. You even have more of a natural hedge on, and the ability to do that. Well, that's a great point. So what being Monday here and me getting back into it here, what did I miss? Thank you very much, Jean Francois. I hope I got your name right, man. Because said thanks both for great answers. I appreciate that. Ask him anytime. me being out last week, not having knowing as much of what was going on in the market, what catch me up a little bit? Did we have did we slow down Thursday, Friday? Were we still going good Thursday, Friday? I had a hard time getting a handle on stuff as I sat down this morning early and started my day.
I think everybody was sitting around playing cornhole Friday afternoon.
Pretty much.
Oh,
Okay.
yeah. But I mean, it was the Wild West. You either had or you didn't, and trucks were another battle. I mean, freight is insane. The market as a whole.
Touch on that a little bit, Charles. What is because as we.
Well, I mean,
trucks,
you have contract wood that you have contract carriers for, and then all of a sudden, that contract carrier doesn't have any assets in the area, and you're going into the open market, and your contract rate's here, and your open market rate's here, so you're paying 35% more. No matter what. Now, if you base your delivered cost to your facility off of an open market freight rate and it went up, I mean, it's just nature of the beast by not hedging that freight cost. But the biggest thing is quite frankly, it's not rates because everybody's aware of that. It's pure and utter availability. And it's really hindering the supply chain. I mean, it is.
So prompt wood on the ground you have sitting at your location. Somebody needs something in the southeast, or give me directionally. How long does it take to get trucks now? What's what premium are you paying versus what you paid a couple months ago?
Probably 15% over what we were paying before, and that was already up 35%. And if you look at a 400-mile radius from where we're at, probably 7 to 10 days easy, and that doesn't include processing costs. I mean, we're sold out through probably the last week of January. So if anybody wanted prompt wood, I couldn't sell it to them.
So basically what you're saying is, it's on the ground. If you want to get a truck, fine, but otherwise prompt wood could be 3 weeks or sooner for me.
Yep.
Yeah, gotcha. What going into the close of the week here? Are you doing a full week? Are you coming in Friday at all, or what's your thought?
I mean, I probably will, but production will be shut down. We've got some big projects on the burners right now, and we've got some more production coming online here. So myself and my, I guess, leadership team, for lack of a better way to call it, have some planning to do Christmas Eve morning, and we're gonna bring in breakfast and spend the day working on whiteboards. The fun stuff.
I love it. Love the whiteboards. Well, cool. I'll be in the rest of the week, and then heading out to Iowa on a plane to do a little hunting, hopefully next week. But I'll be around. So I appreciate everybody giving us signing in today. We've got our call tomorrow. Mike does futures with Greg Kuda, futures from the free seats. Wednesday, I have Greg Riley and Matt Beamer on This Week in Lumber, and Lunch with Lumbermen on Thursday with Matt Lehman. Friday, Mike does his Friday Smart Call. Should be interesting to see what guests we have on that one. Other than that, Charles, I'll look forward to talking to you throughout the week, and have a great one.
Hey, you too, sir. Thank you.
Yep, bye.